K. Kim here with the Traders Club, twotradersclub.com. Thanks for tuning in. Today is July 14, 2017, Friday. Hope you had a good week trading thus far. Welcome to the market update. I'm going to go through these rather quickly. My throat is actually hurting. I had a long day today. I had to make kind of long videos for my members. I did a special report on S&P 500, why I believe that this bullish run could continue for the next 2 years. And obviously we're going to see this minor term corrections, but I don't believe that we're going to see anything more than possibly 5% or you know, maybe 8% at the most for the next 2 years. And so feel free to sign up to my sign up, or join the club and look at some of the plans. I'll put a link there. There's always a link on the YouTube channel or link there, so you can look that up. But anyway, S&P 500 ETF Spider here, as you're looking at daily chart. These two targets is, if you've been following me on my videos, it's been there for a while now. Those are the two levels that I'm targeting. I've been targeting since I think back in like late March, and so I did put another one, 250. I think 250, 253 is possible, but 248 we're going to start to see some volatility at that point. But 50 MA we've been talking about, that's where we found support in the past. That's where we're finding support. This is talked about. This is a bull flagging pattern. I mean, that is pretty much as textbook as it's gonna get. That is a textbook bull flag pattern. It's a perfect location. Why is it perfect location? That textbook bull flag is forming above prior resistance. Because a lot of times when the flag pattern forms underneath the resistance level, it gets a little bit difficult, but it already has cultivated this higher high, and then we're pulling back this in a controlled manner, kind of in this range bound for a whole month of June, just right below, right above this prior resistance, which is coinciding with the 50 MA, which we've been talking about for months now, and the rising uptrend support. Look at support, 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 and support, coinciding with the horizontal resistance, and at the same time, that's where the 50 MA is residing. I did have my Fibonacci on my last video, but I removed it because it was a little bit too cluttered. But if you do a Fibonacci here to here, that is a first level of Fibonacci, 38.2% retracement zone. So you can see we got all kinds of technicals colliding in that vicinity at 240-ish, right? On that 50 MA. Horizontal resist pivot, rising support, 38.2% retracement zone, and the bull flagging pattern, right? And then we found support. I mean, how this is as textbook as you're going to get, right? So we had a good gap of several days ago. We're back above 20 MA. We're back above 50 MA. We talked about this. So this is my blog, and I wrote a blog to, give you guys an idea, so some guidance to how to navigate this market. This blog was written back in May 24 when it just made kind of a near to new all-time high. In this chart, you can see this is how I gave you these levels to watch: rising 20 MA, right, and rising 50 MA, and I explained it. So instead of trying to figure out what's going to happen next day or tomorrow, next hour, because when markets start shaking big, man, it's just everybody's getting stopped out, everybody's getting chopped off, and all these day traders, swing traders, short-term traders, their life is miserable. But somebody like me, and I'm sure a lot of you who watches my videos, who follows me, I'm sure you guys follow me because you guys are longer-term traders, you guys understand this. What I said was this: as long as price stays above rising 20 MA, setting on a minor term sentiment is bullish. Price stays above rising 50 MA, intermediate term sentiment is bullish. So let's just examine that and just kind of understand how it happens. So you can see right here. So this is kind of what's as the market moves higher, it comes down, and it finds support at 20 MA a few times, right? Minor term sentiment is still bullish as long as the price stays above that rising 20 MA. But what I said in that article, if we lose that level to the downside, what is it? So we did that. So right here, we lost that 20 MA. You see that. So how do we navigate? Is that the time to freak out? The crash is coming. We're going to have a 20% correction. The world is going to... No. Though there are so many people are thinking that. So price stays above rising 50 and setting a low. Intermittent sentiment is bullish, right? So ignore all news that reflects stock market. Stop listening to lunatics who have been calling for the crash since February 2016. So now we lost 20 MA, right? So what do we do? What do we freak out? No. We said, okay, so let's be objective here. Next potential level of support is 50 MA. Let's see if the next level of support 50 MA works. And if you combine that 50 MA with other technicals like horizontal pivot, rising support, Fibonacci, if you put all that together, then 240, 239-ish is a strong level of support. And you go back to my videos, go check all of my videos, what I said when this thing's coming down. Oh my gosh, I got stopped out all of my positions. I got stopped out many of my positions because, you don't know, I told you, none of my positions got stopped out because of that one-day decline. No. I actually started adding. I started actually looking for opportunity to start a new fresh positions when market starts shaking big. And then we saw some shenanigans. First, we saw this huge bearish day where we found support, 50 MA. And then we come back down and finally we broke out of that. So you see, so that's how you navigate. So going back here, I'm just going back to this chart because it's much, much cleaner for you to see. So now, same thing. This is what you do. As long as the rising 20 MA and the rising 50 MA, they both gets respected, which it has been. At least in the intermediate term, that 50 MA has never been broken since March 24th. It's respected, 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 yet again respected. You could say next time will be different. If next time it comes back down to 50 MA, what do you think I'm gonna do? I'm gonna buy that dip. I'm gonna buy that dip all year long until it tells me that is no longer a valid or a strong support. If 50 MA, if we lose 50 MA, we got 100 SMA right below it. I mean, if we lose that 50 MA, let's say it's go up, go 248, we come back down to 50 MA, I'll buy that dip. If it comes down to 100 SMA, maybe I'll hold through it, and then it starts to bounce, I buy more. We're in an uptrend. We respect uptrend as long as the trend is assumed to be in effect until it gives us a clear signal that it has been reversed. It has not been reversed. It's healthy and valid. So that's how you're going to navigate it. So again, my next three targets, 248, 250, 253, right? I do think that 250, 253 is possible. Next, I don't know how fast it's going to go, but maybe it could be 2 weeks, it could be a couple months. But it's not going to be a straight up move. It's not going to be smooth. It's going to go up. It's going to have some shenanigans. It's going to have some gap up and gap downs. It's going to form some kind of a double top, and everyone's going to be like, oh my God, there's double top. It's going to fake everybody out. And I think it's going to start to see volatility around 248.56 or so. We probably going to start to see volatility and then start to fizzle and then start to see shenanigans, and then it's going to probably move about 250. Let's say it gets about 250 and start falling back, and then it starts to come down. Do you think gonna start freaking out? No, once it gets about 248, 250, the calls I've been accumulating back in late March, I'll be probably start closing them out around 250 and 253. And then if we see a kind of a sharp decline, what do you think I'm gonna be start doing? Start look for opportunity, and we retest that 50 MA. I'll buy that dip. And then I'll combine 50 MA with the other technicals you see. So that's how you're gonna navigate it. Look at the 20 MA, look at the 50 MA. So as long as it stays above the 20 MA, right? the minor term sentiment is bullish. That's what it did here. There's a minor term. The minor term, we're talking weeks or so. We stayed up, and then we broke below the 20 MA, got where? To 50, and then got back up. We held the 20 MA, and then came down where? 50, and then we're getting back up. We go up, we come back down, hit the 20 MA, and then we hold the 20 MA. We'll probably get back up to 20, 50, 82. And then we're probably gonna do that for a while, like this, and then finally lose and come back down to 50. Right? So that's how you're gonna navigate it to, you know, 20 MA and 50 MA. That was exactly, so you can see this was my target 1, target 2, and I think that's where we're headed. Looks good there. It's bullish. There's nothing bearish about it in the minor term. Are we going to have a shake and bake? Yes. Can we have maybe a gap down on Monday? Yes, it's a possibility. Doesn't mean trend is broken. We're an uptrend. We're an uptrend in a primary term. We're an uptrend in an intermediate term. We're an uptrend in a minor term. We're an uptrend in all terms now. Even when this was coming down, remember I talked about it, intermediate term, we're still bullish. We're just seeing some minor term fluctuation, minor term pullback within a primary term uptrend. Dow Jones, strong looking chart here. This has not even gone down to 50. 20 MA has been acting as a strong support for quite some time now. Much stronger sentiment versus S&P 5. Because S&P 500 came back down to 50 MA. Well, Dow, it never did come back down. You see 50 MA is right over here. And we just made new all-time high here. We saw gap up. Gap is open. It's a strong bullish sentiment here. So that's how you're going to navigate it. 20 MA, 50 MA, but 20 has been acting as strong support here. So as long as it stays above 20 MA, minor term sentiment is bullish. As long as it stays above 50 MA, intermediate term sentiment is bullish. And we treat it like that. Don't try to overcomplicate things with 1987 chart. We put them together. Oh, Black Tuesday, Wednesday, Thursday, Friday, Sunday. Who knows, right? The crash is we're gonna have a tulip here. Oh, it went straight up, so it's gonna come straight down. None of that BS crap that doesn't work. You know, if the market was gonna crash, it was gonna crash in 2016 or 2015. That's what you call correctional phase. Market goes up. Do you remember in 2011 we saw about 21% correction on Spider, and then we saw about 4 years of bullish run, and then we had about 1.5 years of a correction. This is what you call correction through time in the S&P 500, right? Do you remember 2015, 2016 we had about 15% correction, but 15% is not that important. What's important is that we consolidated for about 1.5 years. That's 18 months. We corrected through time. In 2011. When S&P corrected 21%, it all happened in 6 months. But it corrected 21%. 2015 and 2016, when market corrected, it was only 15%, but it took longer to rejuvenate itself, to rest, to consolidate before going higher. It's kind of like a race car. Race car go around and round and on, pit stop, refuel before going higher. So market is continuing to go higher. That's what it's going to do. And this is a great time to be long in the market. But you got to know which stocks to be involved in, obviously. And, and strategize. You got to have a, exit plan, entry plan, all that stuff. You can't just blindly, go and... I think biggest fear for many traders and investors is that, man, how can I go at this level? This is why you don't want to start looking for an entry when market is ripping like this. You start looking for entry when market is pulling back. When market is pulling back. And you'd be like, well, okay, it's easy to say that. Well, it's easy to say, you start looking for entry when market is pulling back. You know what? I practice what I preach. So I'm going to show it to you. For those of you who are skeptical, I know a lot of you who's been following me on Twitter and StockTwits and my blogs and videos, you know exactly what I've been doing. Right there. So this was back in, when did I write this? March 24th, late March, right? Late March. So this was right here. Buyers may be eyeing on 232-ish gap fill areas next level. So this is a support level. I do think we may see some significant dip buyers coming in. 232, 231 in late March. $232 right here, right? So, right here. So, right here. Because it's always easy to say something. You know what I mean? There's so many gurus out there putting out videos and say, "Oh, you should buy it there. You should buy it here." Did you say that then when the market pulling back? Did you say that you're gonna buy it there? Because it's easy after the fact. It's easy to say, "Hey, you should buy it over there. There was a good support level. I called it. I put a chart there, right? Before and after." Here. These are the levels I'll be preparing to buy the dip once again on SPY. What levels am I looking at? 231, 229, 231, 229. This was when things, so when the markets start to come down like this is right here, 231, precisely, right? That's 231. That's that rising support, pivot, and the 50 MA. When that happened, I wrote an article at 231, 239. There, I'll be looking to buy the dip. So that's what you do, right? That's what you do. When you don't start buying it at the top. I mean, you bought it here when this thing started rallying. That was tough. I mean, even if you had a little bit of a patience, you would have got that money back. But I mean, you had to wait for a while. So it's much. We're in a primary term uptrend, though. Obviously, we're in an uptrend. You don't want to do that. You don't want to do that. You don't want to start buying the dip when we're on a downtrend. You don't want to just buy the dip when we're in a consolidation phase. No. When we're in an uptrend, within that uptrend, market goes up, it pulls back, then you can buy that dip. And make sure when you buy the dip, you're not day trade. Unless when you're buying the dip, you gotta give some room, obviously, to kind of fluctuate. That's what you do. So when this thing started coming down here, this was a great level to buy the dip on that 50 MA. That's what you do. Like I said, it's easy to say it now, but that's what I do. I practice what I preach. That's exactly what I do. So when market pulls back, like that's when you buy it. That's when you buy it. You don't buy it when things are moving like this. I mean, you could buy it probably with a quick move to the upside, but Russell 2000, I think the gap technically slightly open if I go to like an intraday chart, but what I really like about it is still we have that sentiment. We got the gap down sentiment, we got the gap up sentiment. That's island reversal sentiment. We lost textbook island reversal pattern because technically that gap is pretty much filled. I wish it wasn't, but we do have a sentiment, so I still kept it there. So we got that. We kind of still have that island reversal sentiment going around here. So you know, we've been in this kind of 7-month, 7-month consolidation pattern. So I think bulls are working very, very hard here. Bulls dodged the bullet here. That gap down, that spooked everybody out. I think a lot of shorts got really excited, thinking that it's going to come back down. Bulls say no. And then gap that up. And you can see a lot of wicks at the top. So still there's some fearful minor term sentiment going around in the small caps. What I think is going to happen is when the spider and the Dow and the NASDAQ starts to slow down a little bit, that's when I think the money is going to start to flow back in Russell. Remember, when Russell goes, they go fast. These small caps tend to go very, very fast. So when they start to break out, it will have a huge moves, and then we have a fast decline and gap back up. So it tends to be a little bit more volatile. But if you're much, much longer term, Russell 2000, I mean, I think if this thing breaks out, man, this thing can get to about 160. Let's continue here. NASDAQ, well, this thing gotten above this resistance. We talked about this level here. We threw a Morningstar reversal, and now we're just right at. We're no longer in a downtrend. Because we were in a minor term downtrend. You see that lower high? We're no longer in that minor term downtrend. Now you see that if this thing pulls back and then starts to do something like that, that will be inverted head and shoulder. Or if this thing pulls back and retest this rising pivot as new support and then get back up, it could continue move higher. This is why it is a very, very difficult job to call top here, thinking that we're going to, because it moves so much that the NASDAQ should see a 30, 40. I don't think so. I personally thought there's a chance that NASDAQ could come down, fill this gap before going higher. I personally thought that was a positive. I didn't think it would come down here and just goes right back up. That's why, a lot of these people, they say, oh, I'm going to short their high flyers and stuff like that. This market will make their life very miserable trying to short the high flyers. I think there are certain stocks that works, but man, indices, no, just because they're high flying. Go to Qs. When did it ever work to short and high flyer? Do you really rather go short on these little stupid little pullbacks? Or do you rather go short and go long on these bounces, man? Which would you rather do? Would you rather buy the dip and ride the long ride? Or would you rather try to short, and then maybe get some short? I guess I don't understand certain type of strategy, but hope it works out for them. Finally, I'll let you guys go with this one. Banks are doing well here. We find support on that prior resistance. Is banks been just like orderly? It's been moving higher in an orderly manner, right? We had this inverted head and shoulders. It confirmed, got up, retest the neckline, got back up, coming back down, retest prior resistance, coinciding with the 20 MA, and looks like we're kind of getting back up here. So looks like banks doing well. I really like the banks. I think banks gonna do well. I think banks and the small caps are going to lead rest of this year, the remainder of this year. That's what I think. I think the small caps and the banks are going to lead. Doesn't mean that Spider or the Qs can go higher, but I think maybe they start to kind of slow down. Maybe it can keep grinding higher, but maybe not as much. I'm not sure, but I think it's the banks and the small caps going to start to move. And Spider looks great for 248, 250, and 253. So we'll continue to be look at this market in a bullish market. Benefit of doubt continues to go to the buyers. We're bullish in all terms: minor term, intermediate term, and primary term. Look at that 20 MA on your Spider chart and 50. As long as it stays above 20, minor term sentiment is bullish. If we lose that, look for 50. And that's how you play it. When it comes down, you buy that dip. When it goes up, you start to maybe close them out. And then if you want to do much shorter term, what I did was I bought the dip here, I added it more here, and then I added it more here. And then I'm still holding calls I entered in Spider back in late March. I'm still holding all, because I'm a position trader, and I'm going to be holding probably about to 250, 248-ish. Before I'm unloading some, and then when it gets about 253, what I'm gonna do is I'm gonna be probably closing most of it. I'll probably hold a little bit just in case, and then if he starts to pull back to 50, guess what I'm gonna do? I'm gonna buy the dip, and then it comes down to 100 SMA a little bit. Maybe this time breaks lower than 50, comes to 100 SMA. Maybe I'll add just a little bit more. Before bouncing higher. And I think the market is going to be very bullish. I think it's going to take a lot of people surprised. I think we're going to have a great year towards the end of this year and next year. But again, it's never going to be smooth. It's never going to be easy. It's never going to be perfect road with the flowers and the sunshine. It's the road to the market. Road as a trader, investor, it's always a construction. There's always a construction going on the road. There's all bumps and there's always shenanigans happening, right? But as long as if you understand this trend, you can able to navigate through. And if you give it some time, give it some room, you can able to trade your position more in a composed, peaceful, stable manner. not to be just get emotional every single day. Market goes up, yeah, market 1,000, oh, you know what I mean? So we have a wonderful weekend. Good luck trading next week.